I made thousands of dollars using this method of seeing in what direction the market is going at out of consolidation phases. The market usually likes to go to highs and lows. A high is the highest point in a specific time area, and a low the lowest point. And when you see that the market is going below a low and comes back, it usually wants to go towards the high on the left side. Until when it goes there to the high depends on how interested are the highs on the way are. So for example, I'm going to draw this one here in, and I'm going to show you here a practical example. That means here you can see here this low, you can see the high, and going downwards and upwards, the market was creating mid highs and mid lows, as you can see here. So the very biggest structure high is coming from here. The very biggest structure low is here. Now you have a lower high in this case here, and this is from some smaller structure. Here you have another two lower highs, as you can see here, and they're more near together. Imagine that these are like stations. So we have here like station 1, station 2, and then it goes here to station number 3, the big one. So it needs to pass something like a, let's just say like sort of a security barrier that you can just see that the market likes to trade at those points. So the thing is now following thing. If you see that the market is going below a low, that means in this case, it goes towards the low and now it comes back in. The market is going to search for its high. The next high is here. If you cannot see that the market is going towards the next area, what is here, it makes not that much sense to assume from here that the market is going up here, especially if you're just trading for 1 or 2 hours within your time. So that means it makes more sense that before the market is reaching those points, that means before the market is reaching that high, it makes more sense to assume from here on that the market wants to reach that high. Or sometimes from this high, this is an own created high within that move, that the market at least would like to go here. And from there on, you want to see that the market is creating pressure. I'm going to make a separate video on how to see pressure. First on here, I'm going to show you here a couple of examples. So here you see, for example, the market is going towards under this low. It comes back up, goes to this high. The next station is up here, right? This is the main reason, by the way, why some traders love to draw in consolidation phases. Me personally, I'm not a big fan of it, because the main reason is just like it touches it here, but you can already see that the market starts struggling starting here. How you can see it? By seeing here how it goes here into a sort of like a half circle. Just the market is sort of drifting of momentum, as you can see here. It's just not that steep anymore going up or down. Then once you can see that the market is here hanging in this area, as you can see here, it's just touching it the whole time. It should not touch that. Then you can see here now it's aiming here for this low, and then it goes here towards this low. And then now on its way, here's the smaller created high, here's the low here. You see here how it's touching the whole time the low. You see it's not touching the high in the back. And then now here's the next target, and then it just comes down. Once the market comes back up, as you can see here, the next target is up here. And then see how smooth it is going through. It's literally not touching this high. It's just like not creating that much candles, what is very nice, until the market reaches this high. Once you can see then that the market is at this high now and is touching this high backwards, as you can see, it stays in this area. The problem is the market is sort of attached here, and it makes also not that much sense that the market likes to go to bigger structure highs, such as up here. The market made it, by the way, towards this high here, but it's literally touching. It's still in this area. You can see here still candles in this area, That makes it just so weak. So what you usually want to see is when there are multiple highs, what the market is aiming at. Check this out. Like here's a high, and then you have here this high, that the market is just like roughly, just like maybe one time touching it backwards, but then just like drifting off, what is really nice for momentum, because making money in trading is literally about seeing in what direction market is going at. That was about like bigger structure. And if you look at the chart now, we have currently this high up here. Let's just place here a high point. And then we have this low here. This was the lowest point here, as you see here, overnight session. You see here how the market is not touching this low. And then you can see here how the market is literally doing here a higher low. So you can see here how it goes higher. Sometimes the market likes to go under it and then goes up. And sometimes you can see that the market is not literally touching this low or like this low. And then it means like, okay, then the market likes to go towards this high. Then from here on, you want to see where's the next high. The next highs are here, for example, and here. And then the next high literally is up here, right? So these are like stations. Just imagine like you have your stations of traders. And then the problem is now here, as you can see, is touching one time in the back. That's all right. But you see now there are a lot of candles. The market is struggling to go here towards the next target. So how can you see that on the practical side? And the answer is make the chart small using a 1 minute chart. Make sure you just see here 2 days. That means here's, for example, Monday. Here's for example, Friday. You can do this in the US 500 between 9 a.m. to 4 p.m. or beforehand, like if you are like the midnight session, like 5 a.m. ish, for example, then that would be the Euro US dollar. And you just can see there literally what the market is doing. What I really love is seeing that in the S&P 500 because it's very powerful here. Seeing how the market here, for example, has its high. This was a high point. Then you have here a low point, for example. And here you can see how the market is literally trying to go under the low. It's just wiggling around, what is very dangerous to trade at. And then once the market is breaking up, it makes more sense that the market wants to go to this high point. But of course, as you can see here, it's just too wigglish. It's very dangerous. And then when it comes back down, this is something what I really love. Once you see that in this time area here, or like here, you see how the market is literally detaching itself from this area and it wants to go not higher anymore. It wants to go back. It goes below it. It wants to go lower, as you can see here, towards those targets here on the left. And the next target has a very big distance from here to there, right? And this is the main reason why I think it's best to trade here in those areas that I just drew here. And down here, it's just getting dangerous because from here on, this distance is so big towards the next target here that it makes more sense that the market likes to go at its own high, what you can see here.